All right, hopping into DocuSign. This is a company that I have owned since the IPO. I've traded it on and off. I've been all the way out a few times. I've hopped back in. I recently have been long and exited a position completely on Friday. So I wanted to follow up on a video on why I made that decision and what I'm seeing when I look at DocuSign. Going back to the IPO and this initial proof of concept of essentially price discovery of what the company is not worth is how I look at this. And the market started to reject it around $65, $70. As it rejected it this first time and it made the all-time company low, this is the move that I'm looking at to retrace. So just drawing the lines from the top to the bottom, zooming back out, you can see that this is a support level as we've gotten back up to the all-time highs, or what were the all-time highs. And then it was a significant support level, from the top down. So resistance initially, once it breaks through, now it becomes support. As it battles between this 100 to 161 range, this to me confirms that this Fibonacci retracement is at least influencing the market when it doesn't really have a clear place to go. Sometimes these Fibonacci's become self-fulfilling. The buy signal is once it closes above 161 after it has tested it as resistance and then closed above it from the top down as support. So this $90 level all the way up to 217 was a nice run. However, with this initial retracement, the sell would be once we fail to hold this zone of 423. Being that I had a lot of equity in the position, felt pretty good letting it go last week up around this. I want to say it was a little under 200 bucks. It's in the trade alerts. But yeah, I'm going to look to see what happens with this over the next little bit. This 175, 180 zone seems to be pretty significant. And we'll see how it reacts if it can get back up to this high of 217, what it does when it gets to that high. If it breaks back out and, good for DocuSign if that's the case. I was okay letting it go. And if there's a breakdown or a reversal, I'll keep an eye on it because I think it's a great company. The product is great. The management, it's a young company, so they're still proving themselves. The company doesn't have a huge moat around it in terms of their service, but they are the best at what they do. So always like to own those best of breed companies. But the stock just seems stretched at this point. And then also, last point on this, the relative strength versus the NASDAQ versus the Qs since September, this really has just taken off. And I sold it into a little bit of strength last week and feel pretty good letting it go. We'll see what it does.